Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Tyler Technologies Inc. quarterly report. Tyler Technologies provides a wide range of integrated software and technology management solutions to the public sector. Their offerings include platform and transformative technology solutions, cybersecurity, threat detection, employee training, data and insights, and digital solutions, billing and payment processing services, outdoor recreation solutions, campsite reservations, activity registrations, licensing sales, public administration solutions, civil services, financial applications, property tax life cycle management, courts and public safety solutions, K-12 education solutions, health and human services solutions. The company also has a strategic collaboration with Amazon Web Services for cloud hosting services. Tyler Technologies Inc. Stock price drop. A multifaceted concern the past year has seen a significant decline in Tyler Technologies Inc. STYL stock price, with a 20.99% drop as of November 1, 2025. This downturn is attributed to a combination of factors rather than a single event. Valuation concerns have been a major issue, with the company's high price-to-earnings ratio sparking skepticism about its growth sustainability. Analysts' downgrades and reduced price targets have also contributed to the decline, as seen in D.A. Davidson's lowering of their target from $585 to $540. Furthermore, insider selling, underperformance against market and industry, technical sell signals, and consistent price pressure have all played a role in the stock's depreciation. Despite strong earnings reports, these concerns have overshadowed positive results, leading to continued stock price decline. The primary drivers of revenue growth or decline can be summarized as follows. Revenue growth is primarily driven by subscriptions revenue, SaaS arrangements, transaction-based fees, and growth in enterprise software and platform technology segments. Additionally, an increase in unbilled receivables and corporate unallocated revenue also contributed to the growth. On the other hand, revenue decline is mainly attributed to a decline in maintenance revenue, software licenses and royalties, professional services, and software licenses and royalties. Furthermore, increases in cost of revenues, sales and marketing expenses, and general and administrative expenses have also negatively impacted revenue. Net income and profit margins have undergone significant changes over the past year. In Q3 2025, net income decreased by -11.6% compared to Q3 2024, but increased by +26.5% for the first 9 months of 2025. This discrepancy can be attributed to the One Big Beautiful Bill Act, OBBBA, which was signed into law on July 4, 2025. The tax reform provisions in OBBBA may have affected the company's effective tax rate and current tax payments. Profit margins also saw an increase, with gross profit margin rising by +3.6% in Q3 2025 and +2.9% for the first 9 months of 2025. Operating income margin increased by +1.2% in Q3 2025 and +1.8% for the first 9 months of 2025. The acquisition of N and MyGov, as well as an increase in accounts receivable, may have also contributed to these changes. Overall, the company's financial performance has been influenced by a combination of external factors, including tax reform and strategic investments. The company's financial performance indicates a consistent generation of positive operating cash flow. The data from page 44 shows that in both 2025 and 2024, the operating activities provided significant amounts of cash, with $409,660 in 2025 and $399,859 in 2024. This trend suggests that the company is effectively managing its operations to produce a positive cash flow, which is a key indicator of financial health. The company's debt level and interest expenses have undergone some changes over the past year. In terms of debt level, the total debt increased by $1,297 from December 31, 2024 to September 30, 2025. However, this increase is relatively small compared to the outstanding principal of $600 million in convertible senior notes due in 2026. Regarding interest expenses, there has been a decrease. The total interest expense decreased from -$4,672 in 2024 to -$3,743 in 2025, indicating a reduction of approximately $929. Additionally, interest expenses specifically decreased by $700,000 from $2.9 million in 2024 to $2.2 million in 2025. Overall, while the company's debt level has increased slightly, its interest expenses have decreased significantly over the past year. The company's financial performance reveals a mixed picture across its segments. The enterprise software segment stood out as a strong performer, with revenue growth of plus 23.6% and operating income growth of plus 28.3%. In contrast, the platform technologies segment struggled, experiencing a decline in both revenue, minus 3.1%, and operating income, minus 13.2%. These divergent trends highlight areas of success and weakness within the company's operations. Management's outlook on company strategy. The company is navigating a complex landscape of regulatory changes, client budget fluctuations, and shifting market conditions. Despite these challenges, management remains optimistic about the company's growth prospects. Key strategies include integrating acquired businesses, leveraging operational synergies, and investing in software development to drive innovation. Management anticipates that changes in AI regulation and ethical standards will impact product development timelines and compliance costs. However, they are confident in their ability to adapt and capitalize on emerging opportunities. The company is also shifting its business model towards SaaS arrangements, which has contributed to an 11% increase in ARR over the prior period. In terms of funding, management believes that existing cash balances and cash flows from operations will be sufficient to meet working capital requirements and capital expenditures for at least the next 12 months. They may incur debt or issue additional securities in the future to pursue potential acquisition opportunities. Overall, management's outlook is cautious but optimistic, with a focus on driving growth through strategic investments and operational efficiencies. The company's financial summary reveals a significant investment in its own stock. Over the past period, the company has engaged in a substantial share buyback program, purchasing a total of 300,025 shares at an average cost of $576.82 per share. This strategic move demonstrates the company's confidence in its future prospects and commitment to maximizing shareholder value through direct investment in its equity. That concludes the financial summary for Tyler Technologies Inc. Feel free to comment below, and I will be happy to answer them when possible.